maybe this will bring a turnaround, is considering extending trading hours from, we know starting 9:30, closing currently at 2:30 local time. Now they plan to extend from 9 to 5 p.m. Can you briefly, Prof, tell us how this will benefit the market?
Well, the fact remains that our a number of markets have longer trading hours than Nigeria. If you take the New York Stock Exchange, for example, trading in the New York Stock Exchange starts from 9:30 and ends by 4. So that's 6.5 hours, trading period. If you look at even South Africa, is from 9 to 5. That's solid 8 hours, trading hours. And of course, one of the longest is that of the London Stock Exchange, where you have trading starting at 8 a.m. and closing by 4:30. So that's about 8.5 hours. So a number of markets, as I said, have these longer trading hours. And what studies have shown actually is that longer sessions, if you like, boost liquidity, market liquidity. So we see in those markets, for example, we see higher trading volumes and values. Okay. Look at what we did last week in terms of trading, volume and value. Trading value last week was just about 85 billion naira. Okay. If you put that in dollar terms, of course, it pales insignificant, compared to what we, what we read.
Okay, Prof. Not just to cut. Not to cut your thoughts there, but not just to cut your thoughts there, but basically you've mentioned that because we don't have longer trading hours, that's why we don't have volume and possibly the value we're looking for in the market. But let's consider the cost here, operational challenges here, the cost of will brokers, the market makers, and even investors. What cost would they face if the NGX really stretches this trading hours, and is the market ready for this change?
Yeah, that's the million naira question there. Yes, of course, you just mentioned the downsides. I was talking about the upsides. Okay, liquidity is one of them. All right. The other one too is price discovery. When you have longer sessions, it also allows the market time to digest, market information. So to that extent, you can also say it also helps to boost the price recovery. And of course, in terms of revenues for the exchange, revenues for regulators, revenues for brokers, that's likely to increase. Of course, for each share that is sold in the market, the exchange gets something, and for each share that is bought, the exchange gets something. So the more the activity will have in the market, the more revenues, they make. The costs you mentioned, operational costs, yes, that's on the downside. That is given, because when you do that kind of thing, you're stretching the number of hours. Of course, you're employing staff. Your overheads will rise, whether with respect to brokers or exchange or the regulator. So that's a fact, that you have mentioned, the issue of course, and that's also why it's important before they embark on this, they should do a study on market readiness. How ready is the market? What's the state of broker infrastructure, for example, the willingness of even the investors? All this should be taken into cognizance before embarking on prolonging the trading session. I would suggest here that instead of going outright from the current 9:30 to 2:30, they may just phase it and start with say 9:30 to 4 p.m. just as we have in the New York Stock Exchange. So that we don't encourage, if you like, market participants fatigue, which can set in when you have very prolonged a period. So it should be phased. That's my point.
And definitely this is something we should consider, Prof. But we'll take a moment.